It's funny. Everyone's chasing the next apartment launch, the next villa hype, but the real smart money is the institutions, the family offices. They are quietly buying commercial, and there's a reason for that. In this video, I'm going to walk you through what's actually happening in Dubai's office market, why the world's biggest companies are moving their bases of operations here, and at the end, I'll show you one upcoming trophy-grade project that, in my opinion, represents the future of Dubai's commercial real estate. I'm Saad. I've been helping investors and corporates get into commercial assets across Dubai for years. Not theory, actual deals, and actual numbers. And my goal here isn't to sell you hype, it's to show you where the real capital is moving and how you can align with it. See, Dubai has evolved for a long time. It is known for luxury homes, off-plan launches. Now it's becoming the headquarter capital of the region. Just last year, office leasing hit over 5.5 million square feet, up almost 40% year on year. Prices and rent are both up around 23 to 24%, and availability dropped below 26%, which is rare for this city. What that tells us, companies aren't just setting up here temporarily anymore. They are committing long term. That's a massive signal for office investors. And for my clients, what I've experienced is there's a lot of shortage of offices around the city. When we are looking for offices for our clients, there are barely any projects where we can tell our clients to invest. You've got global names from telecom giants like Vion to investment firms, fund managers, tech players shifting operations or headquarters here. The reason is simple: minimal corporate tax for most setups, easy business formations, incredible connectivity, and access to talents from literally everywhere around the world. Dubai is now playing the same league as London, Singapore, and Hong Kong, except the yields and lifestyle proposition here are unmatched. Now here's how institutional buyers think. They don't buy the cheapest per square foot. They buy the best tenant profile, longest lease duration, and buildings that are sustainably built and easy to operate. The real due diligence is about the cash flow predictability and easy liquidity. In short, they want assets that don't just look good but perform like a bond. Steady yield, real appreciation, and low volatility. The institutional heart is still the IFC, downtown. But look at what's happening in Business Bay, MBR City, Dubai South. Developers are pushing out grade A inventory because core areas are nearly built out. And historically, that's where the biggest capital appreciation happens, when you get in early before institutions push prices up. Now, every investment has a risk. Let's be clear on that. Vacancy, tenant defaults, or market slowdown. But how to overcome that? If you buy in a well-located, branded, grade A commercial space, your downside is limited because institutional grade demand doesn't evaporate. Businesses don't move out overnight. They sign 5 to 10 years lease. That's what makes the asset class stable. Now, let me show you something that checks all the boxes we just talked about: quality, yield, brand, long-term demand. We are talking about Lumina Alta by Omniyat, a new A-class office tower and hotel right on Sheikh Zayed Road beside the Business Bay metro station. It's 380 meters tall, designed to be one of the most iconic mixed-use towers in the region. Omniyat's track record speaks for itself. The Lana Dorchester, the Opus, one at Palm Jumeirah. Every project they've done has become a landmark. This one combines premium offices, a sky hotel, private lounges, wellness and spa, and even members-only business club. What's special here is that this isn't a residential play. It's a commercial-grade asset built for multinational companies, fund managers, family offices, and global firms. Now let's get into the numbers. I'm here at Omniyat's boutique office, and right next to me is the scale model of the project, Lumina Alta by Omniyat. On your screen right now, you can see the ROI projection of this project. This asset is giving 15% ROI. Now these are not just numbers. Let's dive deep into that. So Omniyat's Grade B office tower, which is the Opus by Omniyat, is trading at 1,000 dirham per square feet on rentals. That location is not even that close to the metro, but around the same vicinity. Now here, taking a conservative figure, that would be 800 dirham per square feet on rentals. At this price per square feet of rental, 800 dirham, a 5961 square feet commercial office in Lumina Alta would be renting out at approximately 4.78 million. The office got full sea views with Bulgari Islands and Burj Al Arab view. Now let's deduct the service charge from this, which is just 26 dirham per square feet. Now 26 dirham service charge is very less for such kind of grade A tower, as these service charges are there in a normal residential building. So once we deduct that, that is approximately 155,000 dirhams. That takes us down to our net ROI of 4.61 million dirhams, and that is 15% ROI on our property. Now here's the smart part. The project comes with a 50-50 payment plan in which you pay 20% down payment now, 30% during the construction in 3 years, and the 50% on handover, which can be financed by a mortgage. At an interest rate of 3.75% only, your mortgage payment of the remaining 50% can be covered within next 4 years only. So essentially, you pay 50% upfront, the remaining 50% is paid by the rent of the property, and that means the property funds for itself. Now here comes my favorite part, the exit strategy. If you want to flip your property, I would suggest you to flip it after 4 years from paying the property from your rent. The Opus, which is a grade B tower by the same developer, is selling out at 9,000 dirhams per square feet. Let's take the worst case scenario. The grade A tower Lumina Alta trophy asset reaches 9,000 dirham per square feet after 4 years of the handover. If you do the calculation, that's incredible that this keeps your property value at 53.65 million dirhams on a property where you only invested 15 million dirhams 7 years back during construction, took the handover, the property paid for itself for the next 4 years. Now the property is standing at 53.65 million dirhams. And you are walking away with a massive capital appreciation on a fully paid off asset. This is how smart investors multiply their wealth, not by chasing the trends, but by owning income-generating, institution-grade assets in the market where global capital is flowing in. So that's the bigger picture. Institutional demand rising, office supply tightening, and Dubai's transformation into a true business capital. If you're already investing here, this is the time to start thinking about commercial. And if Lumina Alta interests you, message me. I'll share you a personalized investor deck, numbers, and pre-launch details personally. Appreciate you for watching, and if you found this valuable, subscribe or follow for more in-depth, real-world insight into Dubai's property market.